Welcome back, everyone, to Not Your Advisor with NYU Grad. I'm recording this on Saturday on the weekend, but this will be covering Friday, April 29th action. And we have a lot to cover. I will try to get this wrapped up in under 30 total minutes, including the premium section, but no promises. So I'm going to cover, in addition to my daily routine and format, I'll be covering gold stocks with the premium members and a little bit in the beginning, the top of the episode, the chattels of Wall Street, mainly DC. And I'll just kind of talk about one specific incident that came across my inbox this week, as well as covering the Friday session and that incredible bounce that we are seeing right now. I definitely expected a bounce. I mentioned while we were falling to expect a bounce, and Google, Alphabet definitely gave us the ingredients for what the bounce was looking for. But before we peel the onion, let's start with breadth. I don't want to get too far away from the format here. So on Friday's session, we had 188 new highs versus 125 new lows. 68% of stocks were advancing versus 27% declining. We had 65% of stocks below the 50-day and 40% of stocks below its 200-day moving average. Now, what stuck out, while it was very bullish for the week and the day as a whole, Apple and Microsoft were limping into the close, and Microsoft was obviously rallying after Thursday night's earnings release alongside Alphabet's earnings release, but about half of the Microsoft earnings pop got sold off into the close. Now, it doesn't mean we're not going to have a continuation day on Monday and Microsoft continues higher. I'm not saying that's not going to happen. I'm just saying at the end of the day, we saw some profit taking. And Apple, I posted last week, I think they're in a lot of trouble because I only see headwinds. I don't see tailwinds in their future. And I think I read they're trying to work with OpenAI on AI features and functionality for their next gen iPhone 16. But I don't know if that's enough. Is that just a Me Too product? Right? Because a lot of the Samsung and Pixel phones already have AI integrated into them. So we'll see. The summary of the Friday session was a V-shaped bounce. Inflation and yields, though, are still very sticky. And I just got finished watching the weekend, one of my favorite things to watch on YouTube, the weekend episode of Adam Taggart on Thoughtful Money with Lance Roberts. And as a reminder, Lance brought up a very important fact that I don't know if everyone in the public knows. When you see pundits and government officials and news headlines saying the inflation is improving, inflation will, get to 2% rate, they're talking about the rate of change of inflation, not the actual prices that you and I are paying in our daily lives. So it's very disingenuous at the very least. I think it's deceitful. It's, one of the analogies I like to make is, if the weather, I'm a weatherman, let's say, right? And the weather news allows me to say if there's less than 3 inches of rain falling, I can report that it's sunny. But when we all go outside, it's still raining on our heads. But the news forecast says it's not raining because my math formula on how I measure the rate of rain allows me to say it's not raining. And that's basically what's going on with all this inflation news. It's really, it's just borderline scandalous. Speaking of scandal, I want to point my gaze to DC. Now, I want to preface that everything I'm going to talk about is sourced from somewhere else. This came across my inbox. I did a little bit of research. I found 3 sources that corroborated this. And I've seen things like this in the past, right? Like, I'm basically talking about a DC official who helped orchestrate and write the TikTok ban bill, trading with this information and buying shares of Meta right after the bill was enacted. Now, it's not illegal. I don't know if you know this, but folks in DC who are government officials are allowed to insider trade. There's nothing illegal about it. Just like how Nancy Pelosi and her husband make trades on the semiconductor index when they legislate rules for that sector. So they enjoy this benefit. Whether it should be allowed is a different story. But, I'm often reminded when I think about DC as Mr. Burns from The Simpsons, basically saying, look, you'll find it's most unfair, but those are the breaks. And, this is how the system is set up. And, in my view, insidious rulers breeds insidious taskmen and taskwomen. So, my viewpoint, very cynically, whether you are a Democrat, Republican, Independent, we're all on the same team. Meaning that we are now the public servants. It's supposed to be those that we elect and vote to run the government on our behalf. They're supposed to be the public servants. But I believe we, hardworking, tax-paying citizens, often bucketed as Republicans, Democrats, consumers, we are now the public servants, feeding into their wealth and power. And these are just the rules that we live by. If you didn't know, now you know. And this is who we trade against. So it's not for the faint of heart. But let me kind of peel the onion here. So I'll cite my sources first, okay? So I initially got wind of this in my inbox, and then I saw a separate report of this on BillCara.com, which linked to Wall Street Ape on X. And then there were also reports of this on CapitalTrades.com, as well as on Finbold, basically stating that McCall, who works in DC, helped write the bill that bans TikTok. Now, I could care less about TikTok. I've never had TikTok. I've never even had Facebook outside of WhatsApp. But it was all bundled in with the $95 billion package for Ukraine and Israel, and they put together this TikTok ban within it. And McCall orchestrated, wrote, helped, voted for this bill. And shortly after, he then went ahead and on March 22nd invested $150,000 in Meta. Then again, another $150,000 on March 26th. And then again, $150,000 on March 28th. So all in, he's $450,000 in this position, which is down at the moment over 10%, depending on which dates you look at. So I guess he needs to improve because Nancy Pelosi is doing a much better job with her trades on the semiconductor index. But yeah, this is what's going on. While you and I are trying to make a living and paying our taxes, they're writing legislation for industries that they can then go make bets against or bet on. This really should be abolished, but I just don't see it happening. Um, I think this is one of the bigger problems of financial markets. I think the other one that's even bigger is the combination of banking and financial institutions, the combination of the sell side and the buy side. They really need to bifurcate that. But again, I don't see that happening either. I don't see it happening until something breaks so hard that there's enough pitchforks in the street. I rarely see things being fixed proactively. Like, oh yeah, that's a pothole. We need to fix that. They usually don't fix it until either there's an accident where someone dies, or enough people bust their wheels and rims and complain. Um, so I'm very cynical about it. I don't think anything will change until the proverbial doo doo hits the fan and then bounces and hits our face. So that's that. I don't want to keep going into that, but that's going on. Um, so let's see. Let's keep peeling the onion here. So, um, what stuck out outside of that on Friday? Always happens on a Friday, it seems. Regulators seized Republic First Bank Corp, a regional bank based out in Philadelphia, Pennsylvania. They had about $6 billion in deposits. I don't even think that's top 10, but a smaller regional bank. But now that the BTFP program is over, we may start seeing more of this going into the spring-summer season. Looking at all sectors for the week, every single sector was green. For the day on Friday, only utilities, energy, and financials were in the red. Communication services, which includes Google, was up 5.73%. Tech was up 1.67%. Consumer cyclical up 1.37%. Basic materials up 0.68%. Real estate up 0.23%. Healthcare up 0.21%. What was weak? Any short positions, any bearish positions. Yields are still very high, although they sold off a little bit. They're now under 4.7, but they're in the 4.6 range. So still a headwind for risk assets. What to watch? Tons of earnings coming out, and Jerome Powell and the Fed can open their mouth again this coming week and start talking. So on Tuesday, you have after hours Amazon reporting. On Wednesday, you'll have the Federal Reserve speaking on like the press conference at 2:30 and the FOMC rate decision at 2 o'clock. ADP job reports in the morning on Wednesday. And then on Thursday, after market hours, you have Apple reporting. So pretty busy week coming up. Free members, thank you for checking in and always being loyal to the daily podcast. I hope you're getting value out of even the free section. We're gaining a lot of traction with new subscribers as well as new followers on Substack Notes. So thank you for that as well. I did include a discount code in the show notes of 10% off if you'd like to upgrade. With the premium members today, I'll be covering gold stocks. I'll be covering how the 20 plus leaders in the past, leaders performed this week and on Friday. And I also have a few member requested stocks that I will also be covering. So there's a lot of content available to you for free, but also I would also love to have you on the paid side as well. It comes to like 59 cents per day for paid. So with that, I will see you all after the Monday session. Premium members, please stay on.